Ever found yourself wondering where to park your hard-earned cash when the stock market feels like a roller coaster, or you're saving up for a big goal like a down payment on a house? You know you don't want it just sitting in a low-interest checking account, slowly being eroded by inflation, but the world of investments can seem vast and, frankly, a little intimidating. That's where cash investments come in. Think of them as the reliable bedrock of your financial strategy, the safe harbor in potentially stormy market seas. They prioritize capital preservation and liquidity, meaning your money is relatively safe and easily accessible when you need it. Now, when it comes to finding the right place for these cash investments, a name that often comes up is Fidelity. They're a major player in the financial services industry, offering a wide array of investment options. But what exactly does Fidelity offer in the realm of cash investments? That's precisely what we're going to dive into today. Before we get into the specifics, let's quickly touch upon why cash investments are a crucial component of a well-rounded portfolio. They serve several key purposes. Safety and stability. Unlike stocks or bonds, the principal value of cash investments is generally very stable. This makes them ideal for preserving capital, especially in uncertain economic times. Liquidity. Cash investments are typically highly liquid, meaning you can access your funds quickly and easily when needed. This is essential for emergency funds or short-term savings goals. Diversification. Including cash investments can help diversify your overall portfolio, reducing the impact of fluctuations in other asset classes. Opportunity cost buffer. Having readily available cash allows you to seize potential investment opportunities that may arise. Fidelity offers a range of money market funds, often categorized by their investment focus and tax implications. You might find prime money market funds. These funds generally invest in a broad range of high-quality, short-term debt securities. They aim to provide a competitive yield while maintaining a stable net asset value, NAV, typically $1 per share. Government money market funds. As the name suggests, these funds primarily invest in securities issued or guaranteed by the U.S. government or its agencies. They are often considered very safe due to the backing of the government. Treasury money market funds. These funds focus specifically on investing in U.S. Treasury securities like Treasury bills, notes, and bonds with short-term maturities. They are also considered very safe and may offer slight tax advantages at the state and local level. Tax-exempt money market funds. These funds invest in short-term municipal securities, the interest income from which is often exempt from federal income tax and sometimes state and local taxes, depending on where you live. These can be particularly attractive for investors in higher tax brackets. Each of these types of money market funds at Fidelity will have its own specific investment objectives, expense ratios, the fees charged to operate the fund, and historical performance. It's crucial to review the fund's prospectus before investing to understand its risks and expenses. While money market funds aim for a stable $1 NAV, it's important to remember that there is no guarantee they will always maintain this value. However, this is a very rare occurrence for high-quality money market funds. Another key cash investment option available through Fidelity is certificates of deposit, CDs. A CD is a type of savings account that holds a fixed amount of money for a fixed period of time, known as the term. In return for keeping your money deposited for the entire term, you typically earn a fixed interest rate. Fidelity acts as a brokerage platform, allowing you to access CDs from various banks. This can be advantageous as it allows you to compare interest rates and terms from multiple institutions in one place, potentially finding more competitive yields than what might be offered by your local bank. When considering CDs through Fidelity, you'll encounter various term lengths, ranging from a few months to several years. Generally, longer terms come with higher interest rates, but they also mean your money is locked away for a longer period, and early withdrawal may result in penalties. Key things to consider when looking at CDs through Fidelity include interest rate. This is the fixed rate of return you'll earn on your deposit. Term length, the period for which your money will be held in the CD. Minimum deposit, the minimum amount of money required to open the CD. Early withdrawal penalties, the fees you might incur if you need to access your funds before the end of the term. FDIC insurance. Generally, CDs offered through Fidelity from participating banks are FDIC insured up to $250,000 per depositor, per insured bank, providing a significant level of safety. Beyond money market funds and CDs, Fidelity also offers U.S. Treasury bills, notes, and bonds directly. These are debt securities issued by the U.S. government to finance its operations. They are considered among the safest investments as they are backed by the full faith and credit of the U.S. government. Treasury bills, T-bills. These are short-term securities with maturities ranging from a few days to 52 weeks. They are sold at a discount to their face value, and you receive the face value at maturity. The difference between the purchase price and the face value represents your interest. Treasury notes. These have intermediate term maturities, typically ranging from 2 to 10 years. They pay interest semi-annually and the face value at maturity. Treasury bonds. These have the longest maturities, typically exceeding 10 years and going up to 30 years. Like Treasury notes, they pay interest semi-annually and the face value at maturity. Investing in treasuries directly through Fidelity can provide a safe haven for your cash and can be particularly attractive in times of economic uncertainty. The interest income from treasury securities is exempt from state and local income taxes, although it is subject to federal income tax. In addition to these specific product types, it's worth noting that Fidelity provides extensive resources and tools to help you manage your cash investments. Their website and mobile app offer features to compare yields and rates. You can easily compare the interest rates and annual percentage yields, APYs, of various money market funds and CDs. Research fund prospectuses and fact sheets. This allows you to understand the investment objectives, risks, fees, and historical performance of different money market funds. Set up automatic transfers. You can automate the process of moving cash into your chosen investments. Track your balances and performance. You can monitor the growth of your cash investments alongside your other holdings. It's always a good idea to carefully research the specific offerings from Fidelity, read the relevant prospectuses or disclosure documents, and consider seeking personalized advice from a financial advisor to determine the best cash investment strategies for your unique circumstances. Remember that while cash investments are generally low risk, they also typically offer lower returns compared to riskier assets like stocks over the long term. Therefore, it's about finding the right balance within your overall investment portfolio to meet your specific needs and goals. With that said, thanks for watching, and until next time.